Greetings, guys. I hope that you are good today. So today we're going to be looking at the Nasdaq 100 chart. So let's get straight into it. As you can see, guys, I have the monthly chart open, and we have this candlestick over here, which is a bearish candlestick with a small body and a long lower wick at this region. So that tells us that price has to come to that point at some point to grab some liquidity. So during the week, I made a short video about whether or not Nasdaq was done selling, and I spoke about the fact that due to this candlestick over here, Nasdaq is not done selling, and in the next couple of maybe days or weeks, we will likely see price coming down to this level to grab some liquidity. Similarly, we also have this candlestick over here, which is very much similar to this one in that it is also a liquidity candlestick, and that we might see in the future price actually coming back to this level to grab some liquidity and then actually going up again, right? So another thing that is also interesting is that we had an overextended W formation in this region with the neckline being there, and we never really got to see price coming back to retest that particular neckline of this W structure. So there is some scope for price to actually continue coming down. Number one, because of this candlestick. Number two, because of this W formation and this neckline not being tested. And number three, because of this particular candlestick over there, which is also a liquidity candlestick. Nonetheless, let's move forward. So what I'm going to do right now is just add some lines to those areas so that we don't forget about the fact that price needs to at some point get to that area to grab some liquidity. There we go. I'm not going to mark this one for now because it is still very much far for now, so we'll just focus on this one for now. So let's continue. So what else do we see on this chart that is significant? Let's see. We have a very strong area of resistance at this point, and we're likely to see price bouncing at that point in the future. We also have a very strong area of support at this point, and we just need to keep that in the back of our minds. But for now, I'm going to head over to the weekly chart. So here we are on the weekly chart. So what do we see on the weekly chart? On the weekly chart, we can see that we had price creating a head and shoulders pattern, with this being the left shoulder, this being the head, and this part being the right hand shoulder. And we saw price breaking the neckline of that head and shoulders pattern. At the moment, it seems as if price is actually retesting the neckline of that head and shoulders pattern, and the anticipation is that price will move down. So what we have is this formation over here with the neckline being there. Price broke the neckline and went back to retest it, and this is where we should have been looking for selling opportunities, as we anticipated that price will move further down to around this region at least, where we have that liquidity candlestick that I spoke about. So let's continue. So what I'm going to do now is actually add a neckline for that particular head and shoulders pattern. Just bear with me. There we go. That's my neckline. Also, over and above us having that inverted head and shoulders pattern, we also have an M formation in this region with the neckline being there, and it's fitting that price should come to this level, which it did, to retest it and push further down. So if you got a sell entry here, then good for you. Just hold until at least price reaches this level here where we have that candle filling. So what else do we see on this chart that is interesting or significant? Another thing that I'm going to do is I'm going to utilize my Fibonacci retracement tool just to see if the neckline of this M aligns with any of the key areas that we have, or the key numbers rather, that we have on the Fibonacci retracement tool. Just bear with me. Sorry, I don't need this actually. Let me just delete this. Fibonacci retracement tool. So there goes my Fibonacci retracement tool, and I think we can see that. Just hold on. I think we can see that the neckline actually is in line with the 38.2% zone, which is there, right? So that's also a very important Fibonacci number, and it's also confluence in as far as us looking for selling um, opportunities at this neckline goes. So let's continue. I'm just going to delete this um, Fibonacci retracement tool. From here, what I'm going to do is head over to the daily chart, seeing that I don't really see anything else on this chart that is significant. So here we are on the daily chart. The first thing that I'm going to do on this daily chart is actually add my channel. Just bear with me. We just need to ensure that our channel is as accurate as possible, just to ensure that at the end of the day, when we do execute, our execution is also as um, what's the word that I'm looking for? As accurate as can be. There we go. Just make it a black color. So here we are on the daily chart. So what do we see on the daily chart? On the daily chart, we can see, just bear with me. Okay. On the daily chart, we can see that we have a market that's actually going down, right? It's a downward market. To add to that, we also saw price um, creating an information there with a neckline there. We had rather another information here with a neckline there. We had another information here with a neckline there. And can you see that, guys? As much as we had that huge M structure that we spoke about on the bigger charts, with the neckline being there, we also have the smaller one here, which also has a neckline at more or less the same region. Hence, we also saw price coming back to test the neckline of that huge M structure, as well as of this small M structure over here, right? So let's continue. As I said, guys, we would have looked for selling opportunities at this point, because this point is the neckline of the huge M structure, and we also saw price, um, or rather the neckline, being in line with the 38.2% Fibonacci retracement tool. So so that's confluence in as far as looking for selling opportunities goes. Nonetheless, we would also need to be careful, because as much as we have all these informations, we also have a W formation in the structure over here, with the neckline being there. And what may actually happen is we might see price bouncing at this neckline and then pushing further up. So we need to be careful. We need to be careful. If you sold here, just make sure that um, you're safe, and that you don't find yourself in a situation where price bounces on the neckline of this W formation and then pushes up. Because what normally happens is that when we have an M formation, we expect price to break the neckline, go back to the neckline, and then push further down. In the case of a W formation, we expect price to break the neckline, come back to the neckline, and push further up. So actually, if you think about it in hindsight, this is a very risky area to buy or sell, and that's because we have two opposing structures, right? We have the W and the M formation. Nonetheless, for all those that love risk, you um, you would have looked for a sell opportunity at this point, but keeping in mind that there's also a W formation here. So let's continue. So what I'm going to do now is actually add a neckline to that W formation so that we don't forget about it, because it's also quite significant. Just bear with me. There we go. That's the neckline. I hope what I'm saying and drawing makes sense, guys. So let's continue. So what else do we see? I also see that we have the small candlestick over here, which is also a liquidity candlestick. It is also almost in line with that huge candle that we had on the monthly chart, which had liquidity at more or less the same level as well. So this is further confluence in that price is likely to come down than actually go up at this point in time, right? Nonetheless, let's proceed. From here, what I'm going to do is head over to the H4 chart. On the H4 chart, the first thing that I'm going to do is just fix my channel, my daily channel. There we go. There we go. Okay, that goes my daily channel. The next thing that I'm going to do on this chart is actually add my H4 channel as well. So how would I add my H4 channel? This is how I would add it. Just bear with me. There we go. I'm also going to make it a different color so that it stands out from the channel that we drew on the daily chart. I'll make it blue. There we go. Okay, so what do we see on this particular H4 chart? Just to recap, on the daily chart we spoke about um, let's see. Yeah, so on the daily chart we spoke about that huge M structure over here, which also has a neckline there. We also spoke about the W formation here, which also has a neckline there. So what we said was that actually this zone is a very tricky area, or a tricky zone, in as far as buying or selling goes. It's very risky because we have the W and we have that M formation, and they have their necklines at more or less the same area, and that's what's happening over here, right? So what else do we see on this chart that is interesting or significant? um so just to add to the fact that we have that M structure as well as the W structure, and the necklines are close to each other, what may actually be wise to do is, in my humble opinion, instead of actually selling here, what may be wise is to actually wait for price to close below the neckline of this information, and also close below this particular channel, and then wait for price to come back to retest the neckline of this information as well as the channel, and then look for further selling opportunities to this point where we had, or rather where we have that huge candle that has a whole lot of liquidity there. That may be the safer option in as far as selling goes, right? And that's what I think actually people should be doing. Rather, wait for price to break the neckline of this M as well as this channel, and then wait for it to retest this region again, and that's where you would look for further selling opportunities to around that point, right? So over and above that, over and above the fact that we have another information here, you need to keep into, or you need to keep in the back of your mind that we also have an inverted head and shoulders pattern here with a neckline there, and that what may actually happen is price may bounce at this point and then come back to this point again, and then maybe push further down or continue going up. So you just need to keep that in the back of your mind as well. So that is it, guys, in as far as the Nasdaq analysis goes, right? Remember that as much as we have this neckline for the W structure, this neckline is also a neckline of this M structure. You know, hence I'm saying it's also probably best to wait for price to break this neckline to the bottom, wait for it to retest this part, and then look for selling opportunities there to that point. That's my analysis, guys. Thank you for watching. If you have any further questions, just let me know. If there are any other charts that you would like me to have a look at, just let me know. Um, Thanks for watching, guys, and peace out.